As you can see now the markets are closed, and I as a trader, what I am going to do, I am going to do analysis for the upcoming trading session, right? So here you can see I have marked the three important support level for the upcoming trading session, and also I have marked the three important resistance level for the upcoming trading day. So what could be my potential trading plan as a trader? So let's say the market opens here and it breaks an important support level. It breaks an important support level, and once I see a breakdown near this important support level, what I'll be doing, I'll be interested to buy put options, or I'll be interested to short somewhere around here, and my potential target could be the next important support level. And if the market breaks the second important support level also, then I'll be interested to hold that position, and my next potential target could be the third important support level. And if the market starts giving a reversal sign at this support level, like if I get to see a bullish engulfing pattern, then I'll be exiting that position according to my analysis, and I'll also be interested to get into a new position which could be towards the call side, because my pre-market analysis or post-market analysis taught me that these are the three important support level for the upcoming trading session. And if the market shows some bullish sign at this important support levels, you can get into a trade after confirmations. So that's what I'll be doing in the live market following my post or the pre-market analysis. And same in the case of resistance level, if the market is breaking this important resistance level, then I'll be interested to get into a trade with looking at some other confirmations as well. And once I get into a trade here, my potential target could be the next important resistance level. And if the market gives me a sign of a reversal at this important resistance level, then I'll be exiting the position, and I might be interested to get into a put side as well. So this is how the most of the analysis looks like, where you have marked your important support and resistance level, and you have planned your trade earlier in your post or the pre-market analysis, and you have planned where you should be trading and where you should not be trading, right? So you have done your analysis, you have marked all of your important support and resistance level, but what are you going to see on the upcoming trading day? The market opens with a huge gap of breaking all three important resistance level, and you might also see a follow through candle. And same in the case of gap down, the market gaps down by breaking all three important support level, and you might also see some follow through candles in some trading scenarios. For this scenario, what most of the traders do, they'll take instant trading decisions, such as you can see the market has gapped up and it has broken all three important resistance level, and I'm also able to see a follow through candle. So what I'll be doing here, I'll be buying call options. So they'll just plan to buy call options just because the market opened with a huge gap up and broke all three important resistance level, and they were also able to see a follow through candle. So with the FOMO, which is fear of missing out, they'll just get into a call side, and once they get into call side, the market starts to reverse. And same in the case of gap downs, they'll just plan a bearish side trade because the market has broken all three important support level, and they were also able to see a follow through candle. So after seeing a follow through candle, the FOMO kicks in, and they'll just get into the put side without any further analysis or confirmations, and as a result you can see the market starts to reverse from that particular position. So you might be wondering, what should you be doing if the market opens with a huge gap up or a gap down? Should you be taking a trade on that particular day, or should you take a trade towards the gap up or the gap down side, or against the gap up or the gap down side? So you might be having so many doubts regarding this gap trading strategies. So in this video I'm going to show you the different types of gaps in the market and the different types of gap trading strategy that you can execute in the market. So there are different types of gaps in the market. The first one could be a common gap. A common gap occurs randomly and do not necessarily signal any significant change in the trend. So if there is no event such as elections, earning, or inflation data, there is no such special event in the market, but you might still see some gap in the market, then that could be a common gap. And the next type of gap could be a breakaway gap. So it basically signals a beginning of a new trend and often occurs after a consolidation period. And the next is runaway gap, or we can also say it as a continuation gap. So this basically confirms an existing trend and suggests further price movement in the same direction. And the last type of gap you might say is an exhaustion gap, which basically indicates an end of a trend and a potential reversal. So what are the trading strategies you might execute for this gap up or gap down market scenarios? So the first one could be fit the gap, or we can also say it as gap filling. So let's say the market is neutral, there is no special event in the market, but still on the upcoming trading day the market opens with a huge gap up or huge gap down. Then at this scenarios, the market going further in that particular directions are extremely low. So you can see here the market opened with a gap up and the market turned out to be sideways for the upcoming few days, and you can see after being sideways the market ended up closing this gap, right? So here there was a gap filling area, and that gap was filled in the upcoming trading session. So this is how a gap filling looks like. So in this scenario, the market opens with gap up or gap down, and the market will not be able to sustain that particular gap up or gap down. Hence that particular gap is going to be filled in the upcoming trading sessions. So this is also one of the popular gap trading strategies. So this gap filling strategy might provide you a decent opportunity in the market. And don't worry, I'll be making a detailed videos on the gap filling trading strategies as well. So stay tuned for that particular videos. And the next particular gap trading strategy is gap and go. So in this particular market scenario, if the market opens with a gap up or gap down, there are high chances that the market might continue in that particular direction. So here you can see an example for gap and go trading strategy. You can see the market sentiment is completely bullish and the market is heading towards the all-time high. So what happened here, the market opens with a gap up and the market makes a rally towards upside. Again the market opens with a gap up and it makes a rally towards upside, and once it breaks an all-time high, you can see again the market opens with a huge gap up and again you are able to see rally towards upside. So this is an perfect example for gap and go trading strategy. And the another trading strategy could be gap and reversal. So let's say the market is completely bullish and all of a sudden if the market opens with a gap down, then there are high chances that the market might reverse from that gap down and you might be able to see a quick recovery from that particular gap down. So to make your trading even better with this gap up and gap down scenarios, you have to stay informed and you must be aware of the upcoming events and you must be aware of the news that might affect the stocks or the market to go either up or down. So in the upcoming videos, I'll make a detailed video on gap trading strategies where you'll be learning at which scenarios should you be trading gaps and at what scenarios you shouldn't be trading gaps. So that's it for this video. Thank you for watching and I'll see you in my next video.